Hello everyone, thanks for joining us today and welcome to this educational presentation where we have a special announcement to make. We are launching our new strategy number 9, an entirely new strategy based on new requirements and new rules in a matter of days. So this is a very exciting announcement today because this is the newest strategy we've had in a number of years. And I just want to share with you some of the setups it has generated in literally the last few days. We'll go back and share with you some examples that the strategy has generated in the recent months as well as the recent weeks. Now, for example, let's look at this stock right here. This is Legend LGND. This was just last January the 9th, just a couple of weeks ago, where it looked as if the stock was having a nice rising pattern to the upside. Strategy number 9, the new strategy I will be sharing with you today, actually generated a sell signal. And the stock immediately fell down, I believe roughly about 40 points within the next week or two. Okay. Now, it not only generates setups in stocks, but also in ETFs. For example, in this indice right here, this was the S&P 500. You could have transposed all of these setups onto an ETF such as the Spiders or the QQQs, because while the market was going up the first part of last year, it generated buy signals. And once the market started to head lower, as we saw these large losses in the markets at the end of the year, well, guess what? It generated some really nice sell setups as well. And the beauty of this is that it's so simple and so easy to apply because it's going to be all done really simply with our new platform. So we are sharing with you this presentation, so you can be one of the first to start trading our new method. Not only all the rules, all the requirements you're going to be learning, but also you're going to be able to apply it on our platform, the PTS Primo charting platform I designed with Pro Trader Strategy. This is the platform that teaches you how to trade in both up and down markets. So this is a great presentation today in that we're going to be talking about something entirely new that we have never had before, and it's going to be launching very soon within a matter of days. Welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. 10 years ago, I teamed up with Pro Trader Strategy so that we could simply educate traders around the world. And we've done that. In our short time together, we've actually have students in over 115 countries around the world, and in virtually every state in the United States, someone is using or learning our methods and techniques. Now, I've been trading for 42 years now. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is, it doesn't mean you're more special than anyone else or you're a special trader. What it means is that you basically made markets. In other words, you made markets for buyers and sellers in roughly about 50 or 60 stocks. So if anyone wanted to buy or sell that particular equity, they had to go up to the trader who specialized in making a market. So I did that. I was a specialist in about 60 stocks. I generated markets during the crash of 1987 and the bull market that followed. So I've traded in just about every environment you can think of, straight down, straight up markets, sideways markets. And on top of that, I've traded just about every system, every strategy, every technique you can think of. So in my 42 years of trading, I know what works in terms of consistency and I know what doesn't. So why waste your time spending thousands of dollars and wasting a lot of time on techniques and methods that really have no consistency when I can shorten your learning curve and teach you what really works over time. So that's what we do with Specialist Trading and Pro Trader Strategies. And also we've put it all together in our platform. We have over 4 decades of information and of techniques and strategies all accumulated on our platform right there. So it makes it extremely, extremely simple. So I'm going to show you and go into detail about a lot of the different highlights of this particular method today. But before we begin, I ask that you please take a moment to view our disclaimer. We're required by law to show you this, so please take a moment to view it. I'm going to show you a lot of performance results, a lot of chart examples of strategy number 9 recently, but please remember that we can in no way guarantee that any of the performance results you're about to see will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So once again, as you're taking a moment to view our required disclaimer, I would like to take this time to invite you all to join us, if you haven't done so already, to follow us on Twitter. I post different information on a daily basis, anywhere from signals that have recently been generated by any one of our up to 9 or 10 strategies and techniques that we teach, to little bits of financial wisdom I've accumulated. So lots of great free educational information. Feel free to follow us on Twitter. Okay, with that said, now remember, we are different from other presentations that you followed in the past in that our only goal is simply to educate you and to teach you. All right. We are first and foremost an educational company. It's not our goal to simply force feed you signals so that, excuse me, you come to a website every night and say, okay, what do I buy or sell? What do they like? Or to give you some system that you have no idea what it's based off of, and you just blindly take the orders that it spits out because you figure it must work, right? This is, in my opinion, why most traders fail. It's been estimated that roughly about 80 to 85% of all traders fail. It's because you're taking yourself out of the game. So Pro Trader Strategies and Specialist Trading teamed up so that you could put yourself back in the game. And the way you do that is with solid fundamental education. So we fill that gap for you. We teach you how to trade using these things that have high levels of consistency. And then once again, you are in charge of your own trading destiny, not someone in a chat room telling you what to buy or sell, not some guy on TV, not even some guy in a webinar, but you yourself are making your own decision. So as you see here, my goal is not to force feed you signals or tell you what the perfect time frame is, the perfect market is. That's up to you to decide. My goal is simply to teach you how to trade with the specialist edge. This was the same way I was taught some 4 decades ago, and what I believe has really sustained me to be able to trade for 42 years now. So hopefully it will be able to do the same for you. Now, as I stated, we are first and foremost an educational company. So just like a classroom, I want to take each and every one of your questions, but please wait till the end of today's class to ask any questions. We don't want to take all of your Tuesday trading day up. So if you just write it down or kindly remember what your question is, I promise I will get to it at the very end. The only question I will answer is this being recorded? Yes, it is. We record all of our webinars. So if you have to leave early, if you're having technical issues, a lot of times you just turn your computer off and on back again. It'll work, or maybe turn off the GoToWebinar and come back, log back on. But if you're still having difficulties, don't worry. We will provide you each with a link to this webinar, okay? All right, with that said, let us begin today's presentation. Okay, let's talk about some of the highlights of this particular method. It is an entirely new method. And when I say that, I really mean new. I am the only one who has been actually trading this for roughly about the last 6 months. I've been paper trading for a good portion of that, and then I actually started trading. In fact, I'm trading it today as we speak. It is an entirely new strategy, and you're going to be some of the first to get a chance to trade it along with me. It is a proprietary pullback method, and I'll go into detail. If a lot of you aren't familiar with what a pullback method is, I'll explain exactly what that concept is. The beauty of strategy number 9 is that even though I may show you the majority of examples today with stocks, it can be applied to anything, any market, any time frame, or any direction. So in other words, when I say, well, you know, you're in charge, you really are in charge, because you can choose what time frame you want. You can choose which market, and you can choose any time frame or market or any direction. It's entirely up to you. That's the beauty of strategy number 9. Now, one of the good things about this strategy is because it's based on pullbacks, and pullbacks oftentimes, not guaranteed, but oftentimes can lead to these large trending moves. Well, you can apply options to this. If you're not one who likes to short a stock or don't have a large enough account size, well, you can simply buy puts for a large move to the downside, or you could actually use some type of spread strategy that has a downward bias. Anything with options is fine. This can work really nicely with if you're an option trader. With all of our methods, with all of our techniques and strategies, we always require that our students first paper trade. Remember, I paper traded this for a good 3 or 4 months before I actually started applying real capital to it. So we always ask that you paper trade first. There's so much more to learn through this simple process of paper trading. Think of any endeavor, think of any hobby, think of any career, actually. There's always a period in time where you rehearse, where you practice. Any athlete has to practice, and it has to work out. Any entertainer has to rehearse. So it's the same with trading. You have to paper trade. That is your practice. And so we require all of our students to do this so they fully understand the process. Our edge here is consistency. Not every trade is a winner. That's okay. In fact, I'll show you a couple of examples that had some minor losses. The beauty of our strategies, and most especially strategy number 9, in my opinion, is that it's able to recoup those losses rather quickly. I'll show you a few examples where we had losses, and in the very next trade, you would have recouped it all and made it back. That's the beauty of a consistency. So what we try to promote in all of our students is not some fly-by-night system that generates millions of dollars a year. We don't believe in that. What we want to do is instill a sense of consistency in our traders, a 2-step forward, 1 step back. Because in my 42 years, that is the only thing that will sustain you. Some method that made a killing 1 month can easily give it back. But the methods that have a nice level of consistency, 2 step forward, 1 step back, the levels that don't, the strategies that don't go for home runs but go for singles are the ones that can sustain you throughout a long period of time. And so that's what our methods do. Okay, so let's go into detail a little bit more about strategy number 9. And one of the few things I have to say, first of all, is because this method is so simple, it's probably the simplest method I've ever traded. Because it is so simple, I'm sorry, and I apologize, I really can't divulge all the rules. Why? Because there's only 2 rules. And it's based off of 2 very proprietary, very simple indicators. So I can't divulge what they are or how they work. I can give you a concept of it, but I can only actually go into detail about one. But strategy number 9 employs 2 simple indicators. Their relationship to the price will automatically produce and generate the signals, okay? So it's because of these 2 simple indicators. If I mention them to you, well, right off the bat, you would know what signal is based off of if you've been trading for any time now. So I can't do that. I'll give you one of them, though. Okay, one of the indicators is the indicator we use for just about all of our methods. I would say about good 80 to 90% of them, and that's the 50-period moving average. That tells us whether we should be buying or selling, okay? Now let's go over what an actual pullback setup is, because I know a lot of you are familiar with that, but many of you don't know what pullbacks are. So let me just give you a refresher course. In an overall uptrend, when the market is overall going up, buy signals will be generated during the decline. Because see, very rarely does something go straight up. All right, you hardly ever see that. Even when something is going just to the moon, it appears it's going straight up, it still has a few days of a downward retracement or a sell-off. Okay, that's called a shallow pullback. Now you can also look for deep pullbacks. That's where you have a long period of sustained sell-off. Most people think, well, this is the beginning of a downward move. But if you have a way to identify the overall trend, well, you know it's just simply a pullback, which means a sell-off in an overall downtrend. That's where we're looking to buy, because that's where you get these nice inexpensive purchases before hopefully the trend resumes back upwards. All right, and it's the same way with a downtrend. In an overall downtrend, we would just reverse. Sell signals will be generated during a rally. So we're looking for the overall trend to be down, and then we're looking for a bounce. Now, where most people would say, oh, the market's bottomed out. Look at all the institutions. They came in, they're all buying, so we must be going much, much higher. The savvy trader will say, no, the overall trend is down. This is just a pullback to the upside. This is an opportunity to sell. So I'll show you how simple it is in some of our examples in just a few minutes. But let's look at these generic charts here. This is a generic pullback buy, all right? The overall trend is up, as we see with the green upward arrow, but we know that nothing very rarely goes straight up. You usually have this period of in a bracket area where you go into a straight up and down kind of bracket phase. And then after you break out of that bracket, the trend resumes to the upside. Well, rather than trying to be a trader that jumps on the move, which is perfectly fine, there's nothing wrong with that, it's just a different style of trading. This style is looking for a pullback buy. We're looking to purchase at lower prices on that sell-off. And we're trying to catch a low price before the trend goes up. Now, if we're sellers, well, we just reverse the process. The overall trend is down, and very rarely does something go straight down. Even when we had those really terrible down markets in November and December of last year, we still had some bounces in the market, okay? That's this area right here. Now, where most people would think, hey, the market's bottomed out, we're going back up. We know that the overall trend is still down because we see it resumes lower. And as a pullback seller, we're looking to sell up here at a high price, okay? The trouble with pullback trading is that most traders don't know if a pullback is in place or if the trend has changed and we're actually going to start going higher. That's the beauty of strategy number 9. It has a unique way of defining whether the pullback has ended or if it is still in place. All right, so let's look at some down market examples, because even though we've had a nice bounce the last couple of weeks or so, the market is still in an overall downtrend, just about. So as we see here in this example in Costco, CUST, all right, this was in December, a month and a half ago. Someone looking at this would have said, well, looks like nothing really happening. We're kind of in a range market. We're just basically going sideways, and we kind of are. In fact, when we add our 50-period moving average, we see that we're below it, then we're back above it, and then just for 1, 2, 3 bars, we're below it. Well, that's all we need, 3 bars, to tell us that the overall trend is down, okay, for strategy number 9. That's all we need. And with that information, along with the one more simple rule, it generated a sell signal right here. Now, someone looking at this will say, why would you on earth think you want to sell here? There's absolutely no news coming out. There's no earnings coming out. The market looks like it's sustained itself. It looks okay. Why would you even think of selling right here? It's hugging the 50-period moving average, so it's not really telling us anything. But strategy number 9 is so simple. It's the simple things that sometimes generate the best consistency. Well, you waited 1 day to get in, and then after that, Costco fell 37 points. All right. Did we have any idea it was going to fall that quickly and down that much? No. Strategy number 9 is not a predictive strategy. It doesn't tell you how low or how high something will go. It just tells you when the pullback has ended. But in the strategy, we give you variable different ways in which to cover or which to exit. You can take a quick exit where maybe you would have wanted to exit on the opening. That's okay. You would have had a nice profit there. Or maybe you want to stay in for the long haul and capture potentially all those 37 points. Remember, you're in charge, not us. We do not trade, nor do we teach systems. Those require that everyone trade the exact same way like robots each and every time. That couldn't be further from what we believe in. We believe that no two traders should ever trade alike. If you're a conservative trader, if you like to get in and out quickly, well, then you get out on the opening, let's say, of the next day where you had a gap down. If you're the type of trader that likes to stay in for as long as possible, well, then you use one of our methods that will keep you in as long as possible. But there is no one right or wrong way. The only wrong way is when you're following some guy in a chat room or on TV and listening to what they say. That is a recipe for disaster. My belief is that's why 85% of all traders fail. You've taken yourself out of the game. But once you listen to the market and jump on board, then you can decide how you want to enter. You can decide where you want to place your stop, and you can ultimately decide where you want to exit. This is our philosophy at Specialist Trading and Pro Trader Strategies. We teach you how to trade so that you can be in charge of your own trading destiny. Here's another example in Facebook. Now, it doesn't take a lot of backwards looking here to see that we've been in an overall downtrend. That's not very difficult. But would you have known back here that we were in an overall downtrend? Well, that's why we apply the 50-period moving average. And if price is below, that's telling us the first rule, what the overall trend is. So we knew well back in August that the overall trend was down. Now, we knew that there was some terrible news earlier in the year in Facebook, and the stock really fell out of bed and gapped down many points lower. A lot of traders looked at that as a buying opportunity. But remember, if you're below the 50, what is the stock? Not some guy on TV, not some institution. What is the stock telling you? It's telling you the overall trend is down, so you only want to be a seller. You do not want to buy anything. Now, sure, you may pick some quick bottoms here and there, but you're going to have to be very quick and get out of them very quick, because look what happened. Just in a matter of days, we make lower lows. It's a lot easier if you could sell on these pullbacks, all right? Because that means you are in sync with the market. That's your job as a trader, to be in sync with the market, not to try and bet when it's going to stop and figure out and predict how high it's going to go or how low it's going to go. That's a gambling mentality. We don't ever think that way at Specialist Trading. What we want to do is just learn how to be in sync. So the first rule is we're in sync with the overall trend because price is below. Now the second rule, well, I can't divulge what that is, a strategy number 9, but look at what strategy number 9 generated. All these signals, a sell signal right here on this pullback to the upside. And then another one right here. And on, right at the top or just near the top of these pullbacks. Now, let me share with you the last two. All right, here was one right here. Now, this last one, as you can see, it went down a little bit, but where all the other ones made new lows, this one didn't. It kind of went halfway and then quickly went up. So if you used one of our tight stops that we share with you, we have upwards of 6 different stop placements. If you used one of the very conservative ones, you most likely would have been stopped out, okay? Let's say that was your first trade with strategy number 9. This is where most traders, want to throw their computer out the window and say, once again, I got, manipulated into buying something that doesn't work. This stuff is, I don't know how I convinced myself to buy this. Well, this is what we mean by consistency, though. 2 steps forward, 1 step back. The 1 step back means you will have losses, minor losses from time to time, depending on how you decide to use the stop placement. But look what happened after that. Rather than, taking your ball and leaving, you have to stay in the game because another sell signal was generated. And had you taken that one, well, you would have made back everything you lost, most likely, if you stayed in long enough, on the next trade. So this is what we mean by consistency. Now, had you stayed in since the very beginning and never taken any of these trades, well, you potentially could have captured 58 points to the downside in just about 3 or 4 months. All right, let's look at NOC here. Once again, most traders looking at this chart would say, well, Steve, I like to follow this stock, and I went to a chat room, and look at this right here. We made a new low. Now, we had kind of a low right here, and when we made this next low, it wasn't confirmed. It was a divergence. So this is telling me that we bottomed out. Then at the special class I took, this $10,000 class that looks at the institutions and its support and resistance and volume, it definitely said we bottomed out. So I'm a buyer of this thing, okay? All right. This is the way 99.9% of most traders trade, myself included. I'm not trying to be arrogant or condescending. When I first started trading some 42 years ago, I traded exactly like that, okay? Every decision I just told you based off this trade was off of what someone or something else was doing. Once again, this is the way most traders trade. But nothing was based off what the market was telling me. Now, if I simply applied the first rule, which is the 50-period moving average, which tells me if we're in an overall uptrend or downtrend, what is it telling me? Well, price is below, so the overall trend is down. So we never want to buy anything if the overall trend is down. That's like swimming upstream. Why would you want to swim upstream when you can have a much more enjoyable experience swimming with the current at your back? That's the same way with trading with the overall trend. So I don't care what anybody says. I don't care what the earnings are. I don't care what the institutions are doing. Trust me, I was listening to institutions 42 years ago when I was on the floor of the stock exchange. It didn't work then either. There was no consistency in that. So why would I start to think that the institutions are right 42 years later? I mean, it doesn't make sense. Those guys lose just as much as anybody else, okay? They just have a lot more money to work with. So what I learned to listen to, what my mentor said was, Steve, don't even listen to that stuff. Listen to the market. What's the market telling you? And I said, okay, well, it's telling me the overall trend is down. Great. So this is just a pullback to the upside. This is just a bounce. This is an opportunity to sell. And guess what? Strategy number 9, in its simplicity, generated a sell signal right here. So where everyone was thinking we've reached the bottom, we're going to make new highs, you would have been selling. Perhaps you bought puts because this is an expensive stock, but it wouldn't matter because 42 points in the next 2 weeks to the downside. Now, even if you had bought down here and said, boy, I picked the bottom, I'm doing really well, you would have had to have been a very quick trader to get out. A lot of traders don't believe it, and when it starts to work against them, what do? They buy more, thinking that, well, it's got to go up more. And then pretty soon, what was a nice profit that lasted for 2 or 3 days has now turned into a loss. Once again, this is why most traders fail. They're out of sync with the market based off of listening to someone or something else. Once you learn how to listen to the market, most of the time it tells you what it wants to do. And right here, it was telling us it most likely wanted to go lower. All right, another example. This is the chart I originally showed you in the S&P 500. This is the PTS Primo charting platform S&P 500 chart. Now remember, last year we had a really nice rising market. It's very simple to make money in an up market. It's almost like throwing darts at the Wall Street Journal. It's just about every trade will win. That's the way most traders like to trade. Anything, fundamental news, earnings reports, indicators, systematic trading. Just about everything works when the market's going up. Okay, but then what happens when it changes its mind? Because it can go up for a while. In fact, it's going up for a long time. But what happens when the market goes into an entirely different environment, okay? And we remember how bad the market was from October to December of last year. In fact, Yahoo Finance reported that U.S. stocks suffered the worst year since the 2008 financial crisis, all right? Do we all forget that already? Remember how bad 2008 was? Well, I certainly do, because that was just the beginning of specialist trading when we started that roughly about 10 years ago. And some of our students had their best setups then, because when the market was going down, where was price? Price was below the 50-period moving average. So we knew not to buy anything. We were out of the market, and we knew to be selling everything. Now, let's apply the 50 to this. And as you can see, well, sure, once the market's going up, the S&P 500, well, you're just a buyer. But at this point, when you get consecutive closes below, even though you're not getting out at the top, that's okay. At least you're in sync with the market now, and you're not going to be a buyer anymore. Well, now you start to sell. And look what strategy number 9 did. While we were going up, it generated 2 buy signals right here on these sell-offs. And while we were going down, look at this nice bounce right here, and look at this bounce right here. 2 sell signals, okay? Now, let me just tell you something. I was kind of deciding whether I was going to do this or not, but I'm not going to show you the chart, but just to let you know, the spiders, or most of the major indices, last night, using one of our aggressive styles in which to trade, strategy number 9, which I teach in the course, generated a sell signal in most of the major indices. So, for example, the spiders. Just about when I started the presentation today, the market was down roughly about 300 points. That's 300 points you could have potentially grabbed just from one day, because yesterday a strategy number 9 sell signal was generated using our aggressive mode. So this is, once you become a member of the course, you'll see how this would have taken place. I just don't want to show you the chart here because it may give it away. All right, let's look at some upmarket examples, okay? Now, there aren't a lot because the market has been basically, for all intents and purposes, been going down for the last 2 or 3 months, but there still were some nice up examples while the market was going lower. For example, in PG, this had been going up in November, all right? And it started to sell off. Or a lot of people would say, okay, well, we've topped out. Look at this is a doji right here. This is a reversal pattern. All the candlestick classes I've taken and all the courses and all the books I've read say that that's the top of the market. All right. Well, what's the first thing we listen to? The overall trend. And sure, that may be the top, but until we go below, we're still looking for buying opportunities. And strategy number 9 gave us a buying opportunity right here. Now, it wasn't a large one, but it was a buy signal that generated 5 points in the following couple of weeks, okay? Here's another example in Yelp. Once again, someone looking at this would say, well, Steve, wow, this has got some major support here, but I think it's going to break it. There's some bad earnings coming. I really don't like this stock, and the market seems terrible. The guy in the chat room I go to doesn't like it, so I think I'm going to sell this. Well, the overall trend is up. Why would you want to sell anything above the 50-period moving average? Why would you want to swim upstream? And in fact, not only here, but here as well, there were 2 buy signals. Now, the first one generated a small little profit. Had you stayed in, well, you would have given back a lot of it. Maybe you would have stopped yourself out breaking even, or maybe you would have taken a quick profit. But either way, you could have gotten back in here and at a nice 8 points to the upside. Another example in Apple. Now, this was going back. This is not a current example in Apple. In fact, I'll show you a current example in Apple at the end of today's presentation. But going back to October, coming into October, someone looking at this would say, wow, well, Steve, I'm not really sure what Apple's doing, kind of just in a range. But if we look, it's not in a range. It's above its 50-period moving average. It's giving us buying opportunities. In fact, there was a great buying opportunity right here using strategy number 9. Very simple, easy strategy to learn. And the stock went up 15 points going into October. Now, let's look at different time frames, because I know that not everyone trades, daily bars. In fact, I know not everyone just trades stocks. So let's look at a weekly chart of Netflix going back to April of 2017, almost 2 years ago. Okay. Now, sure, we look back at this chart. We say, well, yeah, it's easy to see that we've been in an uptrend, but we're kind of just going, slowly but surely upwards. Not giving us a lot of opportunity, and we don't know how high this is going to go. So not really sure. For all we know, this thing could roll over and come back down. Well, sure it could. Anything could happen. But until price, as we see here, it never happened. But until price goes below the 50, we're only going to look at this as a buying opportunity, okay? You don't have to worry about that until we have consecutive closes below the 50. So even though you may say, well, gosh, this can't last forever. Well, until it tells us that it wants to change, we're still going to be having a buyer's bias. And it would have worked nicely in 2017 because in July, a buy signal was generated down here at around 140. And then coming into December, a year ago, December 2017, another one was generated here about 190. And had you held on to the first one, you would have potentially been able to capture 270 points in the next year. Now, we all know Snapple is behaving terribly as of late. A couple of years ago, there was a darling of the IPOs. What if you had purchased some and were looking for a place to get out? You're just thinking, boy, I don't want to lose this, but I have no idea how to get out. I don't know where the bottom is. It just keeps going lower and lower. Well, this could be another advantage to having strategy number 9, because as we see here, it's below the 50-period moving average. And on this little bounce, a sell signal was generated. So who knows? It could have saved you 8 more points to the downside had you held on. So seeing that sell signal, once that was triggered, you could have exited your shares and said, okay, well, if it's a sell signal, most likely it's going lower, so I should be getting out now of my long position. So you can also use it to that advantage as well. Here's a weekly chart of TRIP, T-R-I-P, okay? Sure, we've seen that that's kind of going higher and higher, has a stair-step approach. Well, if we apply the 50, we see that's the reason why, because it's been above the 50. Even though it'll come down and touch it, it never has had consecutive closes below. And look at the nice buying opportunities. There was a weekly buy here in October, just a couple of months ago, a quick 10 points in about 3 weeks. And then just about a month ago in December, right around Christmas time, or the last day of the year, I should say, New Year's, we went up a quick 6 points. Let's go out even to a higher time frame. Let's go out to monthly time frame. If you're an investor and likes to look at monthly charts and you like to maybe buy leaps or long-term puts or straddles, well, let's look at DVN, all right? Someone looking at this would say, once again, Steve, no real clear range here. It goes up, it goes down. How do we know what it's going to do? Well, you apply the 50 and you know that you're a seller. See, that's half the battle, knowing what side to be on. And this tool, the 50-period moving average, automatically tells you. So if we're going to be a seller, well, that means we're looking for these little clear-cut bounces here to sell using strategy number 9. And one was generated right here for a quick 15 points in about 6 months. On this bounce, another one was generated for a quick 10 points in about 1 month. And on this bounce right here, another signal was generated for a quick 20 points in about another 5 or 6 months. So you could have taken advantage of that with options or writing calls or anything that you're interested in. Now, 5-minute chart of the spider. If you like to day trade stocks, intraday trade, all right, this is going back to, I believe this was in the last week of December. We had a really nice upward move on a 5-minute chart, and then it looks like we're rolling over. This is where most traders would say, okay, we've topped out. We are so overbought here on a 5-minute chart. It's time to short this. Well, where is price in relation to the 50? Price is above. So price is above. Are we going to ever short anything? No. Sure, you may get some nice buys below the 50 and sells above the 50 every once in a while. But remember, I'm not trying to turn you into a gambler to pick tops and bottoms. I'm trying to turn you into consistent traders. And the only way to become consistent is to be in sync with the trend. Okay? So the overall trend is telling us that we should be buyers. So rather than look at this as some type of topping formation that we're rolling over, we're looking at it as a buying opportunity. And strategy number 9 generated a buy setup right here. And the spiders went up 8 points in roughly the next 2 or 3 hours. Now, it generated hundreds of points in the Dow. Now, let's look at some other markets. Once again, I know not everyone simply trades stocks. There are different markets to trade. That's the beauty of strategy number 9. It makes no difference what market you're trading. Here's a 4-hour chart of the euro-yen. Okay, this was in December. Once again, doesn't look like much is happening here, but if we apply the 50, well, we're below. So the same rules apply to a 4-hour chart of the euro-yen. That means we're sellers. And strategy number 9 generated a sell signal here. So this is what we mean by consistency. So let's see how well this worked. Well, from roughly the 28th to the very first of the year, we went down a little bit, but nothing much happened. So you could have taken a quick profit. Maybe you're still in the trade. Maybe you stopped yourself out to break even. Nothing really happened for you. Either way, it's your decision, but you really wouldn't have lost a lot. You probably would have made some, but not a lot. This is what we mean by consistency. You don't just take your ball and run, or you don't just sit there and lick your wounds and play the victim. You're still in the game. Why? Because another signal was generated right here, roughly the 1st of January in the forex markets. And look what happened after that. On a 4-hour chart, in 2 days, you potentially could have captured over 820 pips. That's over $8,000 per contract potentially you could have captured. That's on a 4-hour chart of the euro-yen. Let's look at a weekly chart of coffee. If we have any commodity traders out there, I know a lot of people, when I've spoken to a lot of students, when the markets go really difficult to trade, they're really in a really strong downward trend. sometimes even a bear market, they like to switch over into commodity trading because they feel they're trading something that's real, something that's tangible. Well, here's a weekly chart of coffee. All right, as you can see here, coffee has gone straight up. Most traders would say, well, gosh, you got to buy this, right? Coffee, the price of coffee is probably going to rise. Well, let's see what the market's telling us. Here's the 50-period moving average, and so far we're just barely closing below it. And remember, we need consecutive closes, 2 to 5 closes above, to tell us we're in an overall uptrend. So this still has not told us that we're going higher. And in fact, strategy number 9 generated a sell signal. Had you taken that sell signal, a potential 17.5 basis points to the downside. See how the market will make you a consistent trader if you're in sync with the overall trend, which is the 50-period moving average, and you're looking to sell these bounces in the overall trend. Now here's a 30-minute chart of the E-mini futures. This is going back to, I believe, the 7th of January, just a week or so ago. All right? We're above the 50 on a 30-minute chart. Nothing changes. The same exact rules apply. So this means we're going to be a buyer. Strategy number 9 generated a buy signal here. Now nothing much happened for the next hour or two. In fact, it went lower. Depending on how you place your stop, maybe you got stopped out, maybe you're still in the trade. But if you were lucky enough to still be in this trade, in the next 3 days, you potentially could have captured over 60 points in the E-mini futures. That's roughly $3,000 per contract that potentially you could have captured. Now, I'm not saying that that's what's guaranteed. Remember, you're in charge. You decide how long you want to stay in something. You decide where you want to exit, where you want to enter, and where you want to place your stop. We're like a buffet line. You know, you basically get in line and you pick and choose what you want. That's what we offer you. But everything you're picking and choosing has a very high level of consistency. This way, you're trading something that you understand, that you feel comfortable with, and you feel attached to. And that's how you become consistent. Not by trading somebody else's method, not by shadowing whatever they do in a chat room or buying and selling exactly what they say. That is a recipe for disaster. No two traders should ever trade alike. Okay, let's review before we go into question and answer. Let me tell you about an exciting announcement we have to make here. Strategy number 9 is a brand new strategy. As I stated, no one other than myself has been trading this yet. And I've been trading it, as I said, for just about 2 to 3 months with real capital. Prior to that, I was paper trading. All right. Now it's designed to trade pullbacks using 2 simple indicators. I shared with you one of them. I can't share with you what the other one is because if you saw it, then you'd put your heads together and go, maybe the signals are generated this way. Well, then why do I have to become a student of Steve? I can kind of figure it out on my own, I guess. So I want to teach you because that's half the battle, learning how to trade, not just knowing what the rules are. You need to know and be taught by someone and mentored by someone how to actually apply the process. Now, as I just shared with you, strategy number 9 can be applied to any market, any time frame, in any direction. Now, on some of those longer time frames and in some of the aggressive modes that I talked about, you can apply options to because that will usually generate more profits if it is a winnable trade. So we're not guaranteeing you that it's going to generate 10, 20, 30 points, but on those ones that it does, that's where you would want to be applying options. As with all of our methods, we always tell the students to paper trade first. If I can paper trade for 3 or 4 months, you can do it for 2 or 3 weeks, okay? So trust me, you're going to learn so much about something by paper trading. And as I just showed you, what we're trying to instill in all of our students around the world in every state in the United States is not a fly-by-night method. We're not trying to say, hey, buy this $10,000 system and we guarantee you'll be retiring by next year. We don't believe in that. In fact, I would suggest you run if anyone offers that. What we're trying to instill in you is consistency. We want you to be around 10, 20, 30, 40 years trading. We don't want you to make $100,000 one year and then give it all back the first few weeks of the next year. And that's what so many traders do. We want you to be steadily increasing your equity curve so that you have a nice 2 step forward, 1 step back approach. That's what our methods do, okay? So as we get ready to close here, I strongly believe that you owe it to yourself to start out 2019 in the right direction. How many times have you started out the year with so many goals, hopes, and promises, and then you conclude the year very depressed because you were nowhere near where you thought you were going to be? Even though we can't guarantee anything because we don't believe in that, we're just trying to educate you. We strongly believe that you owe it to yourself to at least start out in the right direction for a change. Here's our special offer we have for all the people attending today, for taking the time out of your Tuesday. We're going to offer you not only the strategy number 9 course and a chance to become a new member and trade right alongside with me in the following days here, but we're also going to throw in a full year of our PTS Primo charting platform. All right, this comes with so many different offers, features, I should say, included in it. There's the overall trend, there's short-term trend tools, there's a strength of trend tool, there's a scanner on there for ability to scan for nightly signals. There's just so much. There's a portfolio manager you can use, so many things you can apply to your trading. 42 years of tools and information I've accumulated in one simple platform in front of you that's one click away, okay? You're going to get all the video course instruction, the entries, the exits, and the stop placement, the entire course rules, includes the strategy add-ons if you would like to apply them to another platform you also have. But we would suggest, since you're going to get 1 year of our PTS Primo charting platform, it's so simple because it's one click away, and that's totally free and included. Now, this is our super new strategy special. Now, let me just share with you, if we had given this presentation roughly about a month ago, okay? Because normally this would cost $47.35 if you purchase these just, let's say, a month ago separately. But we're not going to charge you $47.35. What we're doing is we're going to give you a discount sign up of only $29.95. That's a savings of over $1,700 or 35%. But on top of that, if $29.95 is too much to come up with, don't worry. We will establish payment plans with you. So for a small deposit, you can still be up and running and be one of the first to be trading this right alongside with yours truly. So this is a great way to jump on board. To have a payment plan with a small deposit, you can still be trading. Let me show you what you could be taking advantage of. Now, on January 2nd, this was reported in Yahoo Finance, okay? Apple loses $50 billion in market value after warning of rare revenue miss, okay? So this is terrible news, fundamental news, it's bad. Most traders see this and go, oh gosh, I got to sell tomorrow. It's going to go much, much lower. I better get out as soon as possible, all right? What did strategy number 9 tell you in advance of that news? Well, let's look at the chart here. This was the chart 2 days prior to that news coming out. Someone looking at this would say, well, we bottomed out here. This is a really nice signal. Look at this really nice upward bar. And so this is telling me that I got to buy this, right? Well, strategy number 9 generated a sell signal on the last day of the year, 2 days before that announcement, okay? Now, look what happened. You had plenty of time to get in short. Now, someone would say, well, how did you know? Do you guys follow the earnings reports? Did you have some type of estimation about what was going to be going on with Apple? No, it's not required. You can if you want to, because that's also something else that's offered on our platform. We give you a media page where you have live Bloomberg TV. You can follow economic news. But most of our strategies will generate a lot of setups prior to a news event. And so we're not guaranteeing that you're all going to be profitable, but look at how simple it is to take advantage of these big moves. 16 points in 2 days. If you had puts, that would have been a nice trade there. Now, this is something also that happened in the last couple of days. Not all the trades are real big winners, but remember, it's about consistency. While the market has been headed higher, look at this. We had a real sharp sell-off in letter R. All right. Someone would say, well, that's a clear-cut sign you got to sell this, right? Well, no, because the overall trend is up. And strategy number 9 generated a buy signal on the 16th. And in the next 2 days, the stock went up 4 points. I believe it's still headed higher. So these are things that have happened within the last couple of weeks, okay? So this is not something where I showed you examples months ago and it doesn't work anymore. This is happening all the time. And these are only stocks. You'll see signals being generated intraday on futures, on currency pairs, on commodities, okay? Even if you're an intraday stock trader, you'll see signals being generated all the time. Trust me, 2018 is over. Don't worry about it. If you had a terrible 2018, forget about it. It's time to start fresh. A year from today, you will have wished you became a member of the Strategy Number 9 course. So here's how to take advantage of this great offer. Remember, my sister site, Pro Trader Strategies, handles all the tech support with the PTS Primo charting platform, plus they handle all the discounts and the payment plan. So I would really strongly suggest contacting them. There's absolutely no obligation. You can call them directly at area code 310-598-6677, and they will structure a payment plan with you and put it all together, okay? Now that link you see at the very bottom is the link that will take you to the sign-up page and give you more information about the course and what's offered. If you want to, that's not a live link. You have to copy and paste that, but if you want to go to your chat box, the chat box on the far right-hand corner has posted a live link, so you can simply click that and it will take you to that page, okay? Now, as you see here in the chat box, it says, as part of this pre-launch special, you'll get an add-on for TradeStation, MT4, NinjaTrader 7 and 8, Metastock, or the PTS Primo charting platform. You also get 2 licenses if you sign up now. So this is a great, great offer. This is a special announcement. All these add-ons you get. So while you're waiting for this pre-launch, you get the add-ons for all those other platforms where you can also see the method and check it out and really be getting yourself accustomed to the paper trading and processing it. All right, I'm going to leave all this information up here. Remember, if you have any questions, now's the time to ask. Just go to your question and answer box and ask them. And remember, if you're interested in more information, I would strongly suggest contacting Pro Trader Strategies. Call them at 310-598-6677. They have lots of trading consultants manning the phones right now. They can answer any of your questions, and there's no obligation, and they can set up a payment plan. Most importantly, for a small deposit, you can still be up and running and take advantage of all of this, okay? So that's what I would really recommend at this point. All right, let me open up the question and answer box. And, okay, we've got some questions here. Winfield is asking, how does it compare to strategy number 4? And does it need Pat D also to confirm? It's a good question. Well, first of all, strategy number 4 is different in that even though some of the setups that are generated based off strategy number 4 are pullbacks, not every one is a pullback. Sometimes you will not be getting the best price with the strategy number 4. Another point of this is that strategy number 4 is a pattern recognition strategy or method. It's based off a specific pattern that you need to learn. This is not a pattern recognition strategy. This is an indicator-based strategy based off those 2 simple indicators, okay? So strategy number 4 is a good strategy. It's one of our most consistent ones to date. It generates a lot of signals, but it's entirely different. Sometimes you'll see strategy number 4 setups to buy generated while the market's going higher. And sometimes you'll see strategy number 4 setups to sell while the market has headed strongly lower. A lot of traders don't like to trade that way. They don't feel comfortable. And there's nothing wrong with that. They feel much more comfortable selling at higher prices and buying at lower prices. Well, this is a perfect way to do that with the pullback method, which is strategy number 9. Now, the Pat D he's referring to, if you're not familiar with that, is a tool that we use that is a directional tool, and it has many uses. One of the uses we have it for is to determine and also to confirm the short-term trend. Now, it works great with strategy number 4, but it really doesn't apply that much to this because of its pullback method, because it's stretching the opposite direction. So we don't need anything to confirm. You can use that if you want in a certain way, but at this point, it's really not required, okay? So that's another advantage of strategy number 9 because of its simplicity, all right? Vitaly asks, at which point we should consider the market goes sideways? Should we close our trades in that case? Well, there's no way, there's no 100% foolproof way to know when the market is going sideways. But what the 50-period moving average will help you a lot with is that once you start to see it close a couple of times below and a couple of times above, many times like in the summer months you'll see, or prior to a news announcement, you'll see it oscillating 2 or 3 closes below, 2 or 3 above, 2 or 3 below. All right, that should be your clue that we're in a sideways range that you want to get out because you know most likely nothing's going to pan out and most likely signals will not be generated. So that's the beauty of the 50-period moving average. Now, a lot of traders, once again, like to get out of range markets. A lot of traders like to trade them because they want to be there when it busts out of that range. Is there a right or wrong way? No. Remember, you're in charge, not us. We're not here to tell you, oh, no, you should only trade certain ways. That, once again, is why most traders fail. We don't subscribe to that. We don't believe that we should be telling you what to buy or sell or when to get out. We just give you information that has stood the test of time and different variables and ways in which to apply it. But it's ultimately up to you to decide how to apply it, okay? Steve asks, are dojis helpful at the end of retracements? Again, only using in the right direction. Sure, they can be. That is, once again, one of the concepts we have where if you're going to be trading candlestick patterns, you should be trading them in sync with the overall direction, okay? So if the overall trend is down, it's been my experience that candlestick patterns have a higher level of consistency if you use them to the downside as opposed to try and pick bottoms. Because remember, if the overall trend is down, we have no idea how long it will go. Remember that chart of Facebook I shared with you. It's been going down for roughly 4 or 5 months. Well, sure, if you tried to pick dojis or some candlestick chart pattern there to pick a bottom, it may have helped, but you would have done a lot better using candlesticks to help you to the downside. So it's my opinion that all tools should be used in sync with the overall trend. And that's the beauty of strategy number 9, because it's so simple. One of the difficulties with candlesticks is that there's a lot of room for interpretation, for discretionary trading. Because one trader may see one pattern and think it's one thing, another trader may see another one. With strategy number 9, it's very cut and dry. You're not going to sit there and go, well, maybe this is a buy, maybe this is a sell. No, you'll know automatically if you should be buying or selling, okay? Chuck says, somewhere I missed strategies 1 through 8. Okay, so what would be the best strategy for seeking monthly income stream using options? What would you recommend? Well, once again, Chuck, if you were at our presentation at the very beginning, it goes against our philosophy. We don't, I can't tell you how to trade, what's going to generate. We have some traders who swear by a certain strategy number 4, and say it's the best thing ever, and that they've achieved all their goals trading that. And we have other traders who say, no, strategy 8 is the best. I love that one. Or some other ones who say, no, strategy 3 is the best. And none of them are wrong, see, because every strategy has a different feel for the environment, for the movement of the market. So it's up to you to decide. Now, a good way to help you decide is by contacting one of the trading consultants at Pro Trader Strategies, and they can walk you through the different, cultures of each different strategy. And then you decide which one feels comfortable for you, okay? They can also furnish you with some introductory videos so that you can look and see the kind of results each one does. But for me to tell you, oh no, pick this one, it will generate so much income a month, I mean, that would be doing you a disservice, because once again, that goes against everything we believe in. I'm not here to tell you what to trade. I'm here to teach you. And then once you get an overview of what we teach you, then it's up to you to decide, okay? I hope that makes sense. Steve says, just on the retracements. Sure. Steve, so the question is once again on the pullbacks I see in the overall trend for candlesticks. Yes, in other words, sure, you can use them. There's nothing, that we have statistically proven that this would work on the short term, but it's up to you to experiment with. My only suggestion, I would say, is everything, in my opinion, what I've seen in my experience of trading works better when you are in sync with the overall trend. And when I say everything works better, I mean you have a higher level of consistency. I'm not saying that every trade will be a winner, because that's silly. It doesn't work. It's like saying there will never be any rain. Every day will be sunshine and 75 degrees. That's silly. Everything changes. So you will have maybe some losses here and there, but you'll have a higher level of consistency, in my experience, if you're trading in sync with the trend, as opposed to using candlesticks to find tops and bottoms out of sync with the trend, okay? Remember, as we close here, if you have any more questions, anything concerning strategies or whatever, contact Pro Trader Strategies. They're there to help you. There's no obligation. They would like to answer any question that you have, and they would like to be there to help you if you're interested in strategies or interested in something. But remember, everything is there for you, for your educational purposes, and for you to be in charge of your own trading. We are simply an educational company, first and foremost. We're not basically a provider of stock recommendations or signals to be generated for you to take. We want to simply teach you how to trade. So once again, you can be in charge of your own trading destiny. And one of the best ways I know of, from paper trading this for the past 3 to 4 months, and then actually trading it for the past 3 or 4 months, is with strategy number 9. It's extremely simple. And as I said, using our more aggressive version of this, which I teach in the course, it would have generated a sell signal yesterday in the markets. And right before I started this presentation, I saw the Dow was down 300 points. So that would have been a very nice, trade in your direction in just one day. Now, no one knows how low the market will go. No one knows if that's it. For all I know, the market has generated and gone straight up in the last hour. But either way, using our money management, which we teach you, and using different things in the courses, you would have most likely had a small profit, or at least broken even. But I don't think you would have lost anything using what we teach you in our courses. So there's a lot of great free information on the websites to become a member of our courses. A lot of great free information contacting Pro Trader Strategies. Give them a call. Set up a payment plan, because we are launching this in the following days, and you want to be right there in the very beginning before the price goes up roughly about $1,700 or $1,800, and you won't get that free 1 year of the platform as well. Okay? As we close here, I just want to say thank you so much for taking time out of your Tuesday. I hope you got some information out of it. I really look forward to all of you becoming students of mine in the new Strategy Number 9 course. Thank you so much. I wish you the best of luck, and I'll see you next time. Bye-bye.